Now, can this rally be sustained, or is it running out of steam, or is it pausing for breath? I'm going to kick off with Masaki.
Yes, I think current rally is sustainable because the underlying driver, inflation and the corporate governance improvement, are the long-term structural tailwind. In terms of the inflation, it is not just benefiting the pricing power for the corporate, but also have a long-term implication for the Japanese economy. Inflation implies an increasing cost of holding cash, so that may lead to the release of the excess cash on the corporate balance sheet, as well as the household financial asset, so which is largely in the bank deposit. So under the inflationary environment, corporate may utilize their excess cash on the balance sheet for the investment, for the productivity improvement. And in the case of the household, they may reallocate the bank deposit, cash from bank deposit to the investment into the equity market. So that means that the Japanese economy may get a boost from the investment-driven growth. That's a positive aspect, long-term positive aspect for the inflation. In the case of the corporate governance improvement, while there has been the improvement for the last 10 years, there remains much more room to further improvement because still 30 to 40% of the Japanese company holds the excess cash on the balance sheet, and 40% of the Japanese stock is still being traded below one-time price to book. So there's much room for the improvement in that category, that part of the market through the corporate governance improvement. So all in all, we believe that inflation and the corporate governance improvement are the long-term structural driver for the Japanese equity market. Yeah.
Thank you very much. Paul, what do you think about this? Is the market just pausing for breath? Are these corporate governance reforms going to continue to drive growth? What do you think?
Well, I think that Masaki has nailed it, actually, and clearly he's right. We don't believe that the corporate governance reform program is either going to let up or disappear. It will continue, and as I said earlier, the market was demonstrably the cheapest in the world. It is still demonstrably the cheapest in the world, of developed markets at least, and quite a bit cheaper than some emerging markets. So we think that there's a long way to go. And I'll go back to my investment flows argument and suggest that there is a new element that is starting to be seen, which was to do with the correction in the yen and the ending of the negative interest rate environment. You're starting to see domestic investors taking more of an interest in their own stock market, and the introduction of the NISA, modeled on the US ISA program, means that Mrs. Watanabe might finally beginning to get in on the act as well. So there is a kind of wall of money that is still available to go into Japan, quite apart from the international wall of money that has already been seen, most obviously, for example, with Warren Buffett and the investments he made in the trading companies over a year ago, and he's done so well out of. So there's a lot of interest in the market. The market's still cheap.
Yes, and if we can get that wall of domestic money going into Japan, obviously that could make a very big difference. Yeah. And Richard, what do you think? Is this rally sustainable? Is it pausing for breath? What's going on?
Yeah, I think despite the strong run in 2023 in particular, market valuations are still within very, very tight ranges that have been established in the Abenomics period. So that, given the expectations for further improvement in corporate capital efficiency, the corporate governance reforms, shareholder returns in general, mean that there's significant further upside within the market. So if we add to that maybe increased confidence in growth outlook for companies in Japan and the shift from deflation to inflation, I think this ensures that the market will continue with this strong upward trajectory.